Hello, welcome back to Jones Lang LaSalle Southeast Asia Property Market Update for the final quarter of 2013. This quarter, the Philippines has once again outperformed the rest of Southeast Asia, showing remarkable gains in capital values in both residential and office segments. The business process outsourcing is expected to continue driving the domestic growth at 5.8% in 2014, a tad lower than the 6.7% in 2013. Nonetheless, the Philippines economy is expected to outperform the Southeast Asia average, according to the IMA Asia. Business confidence in Indonesia, on the other hand, weakened. Interest rate hike and depreciation of the rupiah has led to a slowing economy. Economic growth in 2014 is forecasted to close at 5.0%, slower than the 5.7% in 2013. Similarly, weaker external performance could lead to a more modest growth in Singapore at 3.6% in 2014 compared to 3.8% in 2013. Overall, the economic fundamentals across Southeast Asia economies have remained stable, supporting the real estate performance. The strong office demand from information technology, consumer goods, pharmaceutical, and real estate sectors have pushed Manila office rent in local currency terms up by another 1.3% in the final quarter of 2013. This stable performance in the office leasing market has sustained investors' interest and sentiments, driving capital values up by 5.2%, way surpassing rental growth. Now, this trend is likely to continue in the short term as the weight of money could compress office yield further in Manila in the short term. Jakarta office market, on the other hand, saw limited investment deals given the dearth of investment assets for sale. Capital value in local currency terms grew marginally at 0.2%, while rents expanded by 2.2%, as some occupiers decided to wait out while the traditional ones such as banking, oil mining, natural resources, and other business services supported the positive but lower take-up of office space in Jakarta. The outlook remains positive given the limited space in 2014. Singapore offices put in a better than expected performance this quarter, driven predominantly by small space occupiers from the professional and financial services sector. This stable demand, together with limited new supply this quarter, gave landlords of good quality office spaces the confidence to push up rents by 4.2% as occupancy tightened. Capital values, on the other hand, held at 0.5%, allowing yields to expand. Looking ahead, the Singapore office market is set on the recovery track, although the impending new completion could put a drag on the recovery pace. Underpinned by stronger demand drivers, office market in Asia remains stable, with the majority of Southeast Asia office rental market on demand. The growth in rents and capital values are largely in pace except for Manila and Singapore, where slight yield compression and expansion are expected respectively. On the residential front, the strong performance in its economy drove capital values up 4.2%, far outpacing the rents which grew 0.9% in Manila. The stable interest rate environment and the strong economy have motivated high-income individuals and households into buying newly launched condominiums. Given the favorable economic outlook for the Philippines, these may encourage further entry and expansion of the O&O and MNCs, which could support the residential leasing and sales market going forward. Jakarta residential leasing market, on the other hand, weakened as expatriate arrivals declined, resulting in rents expanding moderately at 1.2%. Capital values held flat as investor confidence fell on the back of rising interest rates and falling rupiah. 2014 could be a challenging year for residential market in Jakarta, in view of the slowing business expansion and the upcoming general election. On the Singapore front, government policies have led to both leasing and sales market contracting. Tighter immigration, coupled with tighter financing rules, dampened demand for lease and sales, resulting in prime residential rents falling by 1.5%, while capital values contracted 0.1%. Overall, property price index island-wide, as reported by the Urban Redevelopment Authority this quarter, also fell by 0.9%, the first decline since first quarter of 2012, with the prime market showing the largest contraction. Given the stringent policies currently in place, we remain downbeat over the residential market in Singapore. The government is unlikely to withdraw its current policies, and we can expect further contraction in rents and capital values over the next 9 to 12 months.